That CrowdStrike looking good from what he called last time he was on. By the way, put CrowdStrike in chat if you guys invested. And then when he told you about it last time, my guy was popping.
Hey, Trap, what's going on, my guy?
What's good, family?
Yeah. Everything good. Hey, yo, before we start, let me just say something really quick because we got to, we set the room. We started off crazy, but we got to do a couple of housekeeping things. So first and foremost, this episode of Market Mondays is brought to you by Ally Financial. Ally is an option if you're looking to bank or invest. Ally Financial is a leading digital financial service company with passionate customer service and innovative financial solutions. They are relentlessly focused on doing it right and being a trusted financial service provider to both customers and communities. Get with Ally to make the most of your money so you can save, invest, and spend on the things that matter to you. Shout out to the good folks at Ally. They actually will be reporting their earnings tomorrow. Shout out to Ally.
Yeah, I love them dearly.
Yeah. Shout out to them. And then I guess I'll just do the disclaimer while we're here, Ian.
Yep, do it.
Because the fire could just, we started with more fire, but people going to want even more fire. So number one, do your own research. Our content is intended to be used and must be used for the informational purposes only. It is very important to do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our show and wish to rely upon, whether for the purpose of making an investment decision or otherwise. Please do your homework. Please do your research. This is a message brought to you by good folks at Earn Your Leisure and a good brother, Ian Dunlap, the master investor.
And tomorrow we got a dope episode with my boy John Sally, a legend in the game.
Shout out Sal. You're a good dude.
Yeah, super solid dude.
Hold up.
Yo.
Hold up. You cannot finish that without saying, listen, I'm not a financial advisor, nor am I for everything that I say is for entertainment and educational purpose only. Know that if you cannot mitigate the risk when it comes to investing, you must seek out what? Financial advice. I can only take you to the trap house. I know one financial advisor by the name of Rashad Bilal, one part of the Earn Your Leisure family. He can take you to glory. I can take you to the trap house. Now we set the room. Family, what's good?
Protect yourself at all times.
It wouldn't be right.
Wall Street Trapper, what's going on, brother?
What's good, my brothers? What's good, man? Shout out to Ian. What's good, brother? What's up, Troy? What's up, Rashad, man? Y'all know it's always an honor for me to come into the trap with y'all, man. So I always appreciate when y'all tell me to come here. Y'all tell me to come here, I put things to the side, man. So what's good, fam? What we talking about? Is we trapping or is we trapping? You hear me?
I see the emojis going up, my brother. So it must mean that it is time to trap.
Yeah. So let's get right into this. It's a lot going on right now. The stock market was in shambles today. The Dow Jones was down almost 800 points. So I want to get both of you guys' perspective on what today's pullback in the market means.
Trap called a 2% drop, so I want you to start there because you borrowed the crystal ball. Fire off.
For sure, man. I appreciate that, man. So this morning, I go live in the mornings, man. Because I felt like a great way to just talk to the culture in the morning was live in action, right? You don't get that much. So this morning, the great thing about the market is, man, it never does something that we've never seen before, right? Like it won't do anything that we haven't seen before. So the objective is to just pay attention to it, right? Just like we know the sun gonna come up, we know it's gonna set. We know the market's gonna do the same thing. So 3 things we must analyze is what are the current market conditions, right? We understand that. We understand who the players are, right? And then you understand what can be affected by these conditions. So we wake up, we know that the last week, first it was just inflation, right? Interest rates. So one of the things we learned that is when bonds become cheaper than stocks, that is a clear coat sign that something is about to shake. So what do I mean by when bonds become cheaper than stocks, right? So bonds are normally a safe haven. Bonds are normally the place where investors run to when things get a little shaky. But because interest rates are so low right now, right? And then bonds now are high, bonds are now higher than stocks. Let me say that again. When interest rates become low and you can't get a good return on your bond, on your safe haven, bonds now become identical. I mean, typically they say, okay, now bonds are higher than stocks. So now investors have nowhere to put their money, right? Right now we have $4.6 trillion sitting on the sideline with nowhere to go. right? We got $4.6 trillion sitting on the sideline. They can't go to bonds because interest rates are so low, they can't get a good return on it. The market is so choppy right now, they don't know where to go. So we had what's called a rollover correction, right? A rollover correction. What is a rollover correction, Trap? So what happens is this. We understand that mega cap stocks and big stocks, big name stocks have been holding the market up, right? It's something that looks good on the top. So the TV can boast that, yo, Facebook is doing this, Amazon is doing this, Netflix is doing this. But underneath that, you have businesses that are 10% off the high.
Mm-hmm.
Right? You have businesses that are 10, 12% off the high. So the correction isn't at the top, it's at the bottom. So now you start to feel it when the ones at the top start pulling their skirts up, right? So when they start pulling their skirts up, now the market starts to react. Why is the market reacting like this? One, interest rates are high, boom. Then you have this new thing that pops up that say, yo, we got this COVID Delta strand that's out right now.
Yep.
Mm-hmm.
Right.
Yeah.
So now you've added something on top of something that was already big, right? So we already understand, again, interest rates will always play a big part in what this market does. That 10-year note is something everyone who's investing should pay attention to. If you don't pay attention to nothing else, once that 10-year note, excuse me, guys, once that 10-year note starts to go down, we understand that interest rates, mortgage rates, everything else go down. That causes the market to somehow panic, right? So those were something that was happening. So me just identify what's going on. I'm like, yo, because I already understood that fair businesses were 10% off the high. Once good businesses start coming down, we understand now we can have a pullback, something we haven't had. Sell-off, something we haven't had since probably about October of last year. Ian, you can correct me if I'm wrong.
Yeah, you're right.
We overdue for those type of things. So I'm like, yo, because I know now we're going to be in a heavy sell-off, and this was another thing that triggered it for me. A company today like AutoNation, something I tell my trappers about all the time. You understand when things start to happening, what are something that people want to like stray away from? Like, so nobody wants to really buy a car in economic times that are unstable. So they'll go to places where they can get discount parts all the time. If you don't know how to get your gym, it's an alley-oop, you do what you want to do with it, right? So a company like AutoNation, who had great earnings, still declined. Why? Because in times like this, earnings don't matter because people just trying to run for cover. So I said, yo, we're probably going to see about 2% today because something is overdue. We got about 2.6% today. So that's my analogy on it. Price multiples are real high. When I say that, PE ratios compared to stock prices. So when you say that, it's what are you paying for $1 of a company's earnings or a company's profit? That is high compared to the actual stock price. So all these things line up, you now have this writings on the wall for a pullback or for a sell-off. Let me correct it too. You're in a situation for a sell-off. And then that sell-off can get pretty deep, which now causes an overall market correction, which now puts us in a situation where we have buying opportunity. So that was my quick ramble. I hope anybody caught that.